How's it going, everyone? I hope you're all well. Things are not looking good for Cardano, so please be aware, Cardano holders, that unfortunately, even though there was a macro bullish pattern, spent the entire year forming to break to the upside and target just sub $2 through this measured pattern, the neckline was never broken, and we had a fundamental news event, external factor that came into play and made Cardano not only fail to break out, but also lose the ultimate key level of support, which takes an average of the last 200 daily candles. Remember that 200 days is over half a year. So it really does suggest that the short to mid-term trend, if this level is lost, the trend is shifting in the bearish direction. This setup needed to see the 200 EMA holding up a support. As you can see here, we entered a consolidation zone when the red 200 EMA was lost. Eventually that was recovered, forming this neckline or pumping back into a neckline which was already previously there just for the next sets of occasions. And unfortunately, with those rejections, you actually started to form a bearish pattern, which I've spoken about in my last few updates, this head and shoulders pattern. Funnily enough, the neckline is that 200 EMA. So even though you can see the larger pattern is the bullish one, it did not matter because the most recent one was this bearish one and it was setting up. And of course, my bias is based on key levels holding or breaking. So in this case, with this key level failing to hold, which was needed for the bullish breakout, it's of course the opposite now is going to happen. With this being lost, I have to stick with a bias of a bearish mentality unless I see those structural changes. And I made you all aware of that in my video yesterday, that Cardano must recover the 200 EMA. Let's just call it 82 cent. But unfortunately, guys, what I also made you all aware of in yesterday's update is that it's most likely going to pump, find resistance, and start dumping back down again to see whether this 63 cent level of support will actually hold up. And we can already start to see the weakness stepping in here. Now, even if it pivots one more time, there's a lot of resistance in the way. 82 cent is not where it needs to pump to, but it needs to recover and flip it into support. So it needs to break beyond that point, come back to it and hold. Then it can actually pivot off of it to continue higher. Right now, there's many steps in the way of that. It's a lot easier for it to keep dumping. And in my 6-7 years of being in the markets, whenever you get large wicks like this, and this is of course occurring on majority of the altcoins, they tend to get filled. Maybe not 99 or 100% of the way, but they do tend to get filled. If everyone was getting liquidated due to longs through this move down, and everyone's entering longs again just to pump it back up, what is the most likely scenario? That they go and take that liquidity once more. So all Cardano needs to do to avoid a situation like that is, if it wants to test 63 once again, see whether it holds up as support and it can reverse before losing it, 82 cent needs to be flipped back into support, and it will invalidate any potential further downside. But at the moment, that is not the case. Price is under the moving averages and under the neckline of this head and shoulders pattern. So we'll have a technical target just like this. This would be its measured move, and that would be at a new low once again. So keep your eyes peeled on the chart, but also here on the YouTube channel. Make sure you subscribe, like, comment, and share to bump up that algorithm. And if you want to get educated, check out the list of offers that I have, whether that's the one-to-one live streams or the ebook or Discord community.